Imagine for a moment that you are staring at a screen, a simple line on a chart, and that line, defying every piece of conventional wisdom you've ever been taught about money, about value, about the very fabric of our economic reality, has just pierced through a number so audacious, so seemingly impossible just a few years ago, that it feels less like a financial data point and more like a science fiction headline. $111,153.74. Let that number sink in. Let it dismantle every doubt you've ever harbored about the potential of digital currency, about the power of a decentralized network, about the sheer, unadulterated force of a paradigm shift happening in real time right before our eyes. This isn't just a price update. This is a seismic event in the history of human commerce, a crack in the foundation of the old world's financial system. And if you are watching this, it means you are witnessing history, not from the sidelines, but from the front row. This is the moment Bitcoin surpassed a 111,000 USDT. And this is not an accident. It is an inevitability that was written into its code back in 2009. But before we dive into the profound implications of this specific price level, I need you to do something for me and for your future self. If you are ready to understand not just the what, but the why behind this monumental shift, if you are ready to see the matrix of this new financial world, then hit that subscribe button and smash the like button right now. Because what I'm about to walk you through isn't just analysis, it's a blueprint for understanding the next decade of global finance, and you are going to want to have a front row seat for every single revelation we uncover together on this channel. Now, the number 111,753.74 USDT with its tidy daily increase of 1.63% seems so sterile, so clinical when you see it on a news ticker. It reduces the storm to a statistic. To truly comprehend the magnitude of this event, we must first erase the chart from our minds and go back to the fundamental, almost philosophical, proposition that Bitcoin represents. It is not a company, it does not have a CEO, it does not have a marketing department, it does not have a product in the traditional sense. What it has is a protocol, a set of unbreakable mathematical rules, and a global decentralized network of computers and people who have voluntarily agreed to those rules. This is the core of its power, and the reason why every attempt to kill it has only made it stronger. Think of it like this: for thousands of years, the concept of value has been inextricably linked to a physical object. A shiny metal, a piece of paper backed by a government's promise, a shell, stone, or to a centralized entity like a bank that keeps a ledger of who owns what. That entire history of value is predicated on trust in a third party. Bitcoin surgically removed that third party. For the first time in human history, we have a system that allows for the flawless, frictionless, and final transfer of value between two parties anywhere on the planet without requiring them to trust each other or a middleman. They only need to trust the math, the code, the immutable logic of the network. This is not an incremental improvement. This is a categorical leap on par with the invention of the printing press or the internet itself. It is the digitization of sovereignty over one's own wealth. And this breakthrough didn't happen in a vacuum. It was born in the aftermath of the 2008 global financial crisis, a stark demonstration of the profound fallibility and, at times, the outright corruption of the trusted third parties we had all relied upon. The Genesis block of Bitcoin, the very first block ever mined, contained a hidden message, a headline from the Times newspaper on January 3, 2009, Chancellor on brink of second bailout for banks. This was not a coincidence. It was a manifesto. It was a declaration of monetary independence from a system that had proven itself to be broken. So when you see that price of 111,000, you are not just looking at the value of a digital token. You are looking at the market capitalization of an idea, the idea that people can be their own bank, the idea that money can be sound, predictable, and immune to the whims of politicians printing it into oblivion, the idea that financial inclusion isn't something granted by a corporation or a government, something accessible to anyone with a smartphone and an internet connection. This is the bedrock upon which this entire edifice is built. The price is merely a symptom, feverish thermometer reading of a world that is slowly, then all at once waking up to this new reality. The journey to this specific number, however, was not a straight line up and to the right. It was a gauntlet of brutal winners, spectacular bubbles, and relentless skepticism. Every step of the way, the voices of the old paradigm declared it a fraud, a bubble, a passing fad for criminals and nerds. And with every crash, they would gleefully announce its death. Yet here we are. Each of those cycles, from the double-digit dollars to the $1,000 mark, from the $1,000 mark to the $20,000 peak of 2017, and from the subsequent crash to the staggering new heights we see today, served a critical purpose. They were not merely periods of price discovery, they were purification cycles. They washed out the weak hands, the reckless speculators, and the get-rich-quick schemes. They forced the core developers to harden the network, to improve its security, to scale its capabilities. And most importantly, they onboarded a new, more sophisticated cohort of believers each time. First the cypherpunks and libertarians, then the retail investors, then the high net worth individuals, and now decisively the institutional titans. The very banks and financial institutions that once mocked Bitcoin are now scrambling to offer custodial services, to create Bitcoin ETFs, to allocate a portion of their multi-trillion-dollar portfolios to this new digital gold. They are not doing this out of ideological conviction. They are doing it out of financial necessity. They see the writing on the wall. They see the deteriorating purchasing power of the currencies they hold. They see the endless quantitative easing, the soaring national debts, the geopolitical instability that makes traditional safe havens less safe. And they are making a calculated, rational bet that a decentralized, scarce, borderless, and neutral asset is the ultimate insurance policy against a failing system. The break above 111,000 USDT is not the end of this story. It is the loudest, most undeniable confirmation that this bet is paying off. It is the market screaming from the rooftops that the paradigm has shifted. And if you are not yet positioned for this new world, the time for hesitation is over, but this is just the surface. To truly understand the forces that conspired to push Bitcoin through this specific psychological barrier at this specific moment in time, we need to dig much, much deeper into the tectonic plates that are shifting beneath the global economic landscape. And that is exactly what we are going to do right after you make sure you are subscribed and have that notification bell turned on, because what we are about to uncover next will change the way you see the entire financial world forever. So, what are these tectonic forces, these invisible engines of demand that have propelled Bitcoin to this staggering new altitude? It's a complex symphony, not a single note, and to believe it's just about speculation is to profoundly misunderstand the fundamental restructuring of global capital that is currently underway. Let's start with the most powerful, yet most misunderstood driver: monetary debasement. We are living in the greatest experiment of fiat currency the world has ever seen, a silent theft authorized by central banks and governments across the globe. Since the year 2000, the US money supply, what economists call M2, has exploded by over 600%. Think about that for a moment. For every dollar that existed at the turn of the millennium, there are now more than $6 chasing the same, or in many cases fewer, goods and services. This isn't some abstract economic theory. This is the reason your grocery bill feels like a monthly shock. The reason a down payment on a house seems like a distant fantasy for an entire generation. The reason the cost of education and healthcare has skyrocketed into the stratosphere. This is inflation, not the temporary, transitory kind that politicians and central bankers promise you, but the systemic, permanent kind that is baked into the very DNA of a system that requires endless debt creation to simply avoid collapse. Your money is being systematically devalued, its purchasing power eroded, in a slow motion confiscation of your wealth and your labor. Now enter Bitcoin. Its monetary policy is not set by a committee of economists in a closed room who can change their minds based on political pressure or flawed economic models. Its monetary policy is written in code, enforced by mathematics, and visible for anyone in the world to audit. There will only ever be 21 million Bitcoin, ever. Not a single coin more. This fixed, predictable, and unchangeable supply schedule stands in stark, defiant opposition to the endless printing presses of the fiat world. It is digital scarcity. It is the hardest money humanity has ever created. Gold, often cited as a hedge, has an annual inflation rate of around 1.52% due to new mining output. The US dollar's inflation rate has been wildly unpredictable, soaring into double digits in the 70s and 80s. Bitcoin's inflation rate, its so-called stock to flow, is predictably declining with every 4-year halving event, marching inexorably towards zero. This is the ultimate hedge. When you buy Bitcoin, you are not just making a speculative bet on a price going up. You are performing a fundamental act of capital preservation. You are exchanging a deteriorating asset, your local currency, for an asset with a guaranteed strengthening scarcity. You are opting out of the silent tax. The break above a 1 in 11,000 is a direct consequence of this realization dawning on a critical mass of individuals and, crucially, institutions. They aren't buying Bitcoin because it's a cool tech toy. They are buying it because it is the only viable lifeboat in a sea of monetary inflation. This leads us to the second colossal engine: institutional adoption. For years, the narrative was that Wall Street would never touch Bitcoin, that it was too volatile, too unregulated, too fringe. That narrative is not just dead. It has been resurrected, given a suit and tie, and placed on the trading floor of every major investment bank in the world. The floodgates truly opened with the launch of the spot Bitcoin ETFs. These financial instruments, offered by giants like BlackRock, Fidelity, and Grayscale, allowed traditional investors to gain exposure to Bitcoin's price without the technical complexity of managing private keys and digital wallets. They can simply buy a share of the ETF in their standard, regulated brokerage account the same way they would buy a share of Apple or Microsoft. The result has been a tidal wave of capital, the likes of which the crypto space has never seen. We are not talking about millions or even hundreds of millions of dollars. We are talking about billions upon billions of dollars of daily net inflows from pension funds, sovereign wealth funds, endowments, and financial advisors rebalancing their clients' portfolios. This is no longer fringe capital, this is mainstream capital. It is the capital that manages the retirement savings of teachers, the nest eggs of grandparents, the sovereign wealth of entire nations. This institutional demand is structurally different from the retail-driven bull runs of the past. It is sticky long-term and fundamentally changes the supply and demand dynamics of the entire Bitcoin market. The available liquid supply of Bitcoin, the coins that are actually for sale on exchanges, is being vacuumed up by these ETFs at a rate that far outpaces the daily production of new coins from miners. The halving events, which cut the miner reward in half, only exacerbate this supply shock. We are in a situation where demand is accelerating exponentially while the new supply is being constricted by a pre-programmed unchangeable rule. Basic economics tells you what happens next, price discovery to the upside, and not in a gentle, predictable way, but in violent, breathtaking leaps to new equilibrium points, exactly like the one we are witnessing now at 1011,000. But the institutional story goes far beyond the ETFs. Major public companies like MicroStrategy have transformed their entire corporate treasury strategy, converting billions of dollars of their cash reserves into Bitcoin, treating it not as a speculative asset, but as their primary treasury reserve asset, a move that is fundamentally stronger than holding cash, which is guaranteed to lose value. This is a blueprint that other corporations are now actively studying and beginning to emulate. Nation-states like El Salvador have made it legal tender, and others are openly discussing adding it to their central bank reserves as a hedge against Western financial sanctions and the weaponization of the US dollar. This is no longer a financial trend, it is a geopolitical one, the convergence of relentless monetary debasement and a tsunami of institutional capital creating an unprecedented supply shock is the core engine of this price movement. But to stop there would be to miss the final and perhaps most profound layer of this story, the technological and philosophical evolution of the Bitcoin network itself, which we will dive into right after you hit that like button, and let me know in the comments what you think is the single biggest driver of this price surge. Is it inflation, the ETFs, or something else entirely? Your perspective is crucial to this conversation. You see, to view Bitcoin as merely a static digital token, a frozen monument to its original code, is to miss the most dynamic and revolutionary aspect of its entire existence, its evolution. While its core monetary policy of 21 million coins is sacrosanct, the layers being built upon its foundational blockchain are transforming it from a simple store of value into a vibrant, global, decentralized financial ecosystem. And this technological renaissance is adding jet fuel to the price explosion we are witnessing. For years, the primary critique, even from its supporters, was its scalability and functionality. The base layer, Bitcoin mainnet, was designed for security and decentralization above all else. It was the ultimate settlement layer, but not necessarily the best for conducting millions of small, cheap, everyday transactions. This is where the narrative has radically shifted with the explosive growth of the Lightning Network and other second-layer protocols. Think of Bitcoin mainnet as the bedrock, the immutable granite upon which value is permanently and securely recorded. The Lightning Network is like building a sprawling, high-speed highway system on top of that bedrock. It's a Layer 2 solution that allows for instant, virtually free peer-to-peer transactions by creating payment channels between users. These transactions occur off-chain, meaning they aren't individually recorded on the main blockchain until the channel is closed, which alleviates congestion and slashes fees to a fraction of a cent. This isn't just a theoretical upgrade, it's a practical revolution that is already happening right now. People are using Lightning to buy coffee, to stream tiny amounts of money to content creators in real time per second of video watched, to send remittances across borders without the predatory fees of services like Western Union, to create entirely new microeconomies that were previously impossible. This technological leap fundamentally alters the utility proposition of Bitcoin. It's no longer just digital gold. It's becoming digital cash. It is evolving into a medium of exchange for the entire world, capable of competing with and surpassing the legacy systems of Visa and SWIFT for speed and cost. This massive expansion of its potential use case from a passive asset to an active, Circulating currency dramatically increases its total addressable market and, by extension, its fundamental value. Every new user who downloads a Lightning wallet, every merchant who starts accepting Bitcoin payments, every developer who builds a new application on this layer represents a new node of demand, a new reason for the network to be valuable. But the innovation doesn't stop at payments. We are witnessing the birth of a whole new frontier, often referred to as DeFi, or decentralized finance, built directly on Bitcoin's secure foundation rather than on other, potentially less secure blockchains. Projects are now enabling the tokenization of real-world assets, from real estate and stocks to bonds and commodities, on the Bitcoin blockchain through protocols like RGB or taproot assets. This means you could represent ownership of a piece of commercial property or a share in a company as a token that lives on the most secure and decentralized network in the world. The implications are staggering for liquidity, transparency, and accessibility to global capital markets. Furthermore, the recent Taproot upgrade, the most significant technical improvement to Bitcoin's protocol in years, has unlocked a new level of privacy, efficiency, and smart contract functionality. While Bitcoin will never have the complex, generalized smart contracts of a platform like Ethereum, Taproot allows for sophisticated, specific smart contracts that are secure, private, and efficient. This enables things like more complex multi-signature wallets for enhanced security, discrete covenants that can place conditions on how Bitcoin is spent, and the foundation for more advanced decentralized applications that don't compromise Bitcoin's core value proposition. This ongoing organic development, driven by a global collective of developers who are deeply committed to the principles of sound money, is a powerful counter-argument to the claim that Bitcoin is a stagnant technology. It is, in fact, a living, breathing, and rapidly evolving protocol, and the market is just beginning to price in the monumental utility that these technological layers are creating. This isn't a pivot, it's an augmentation. The digital gold thesis remains intact and is stronger than ever, but it is now being complemented by a digital cash thesis and a digital capital markets thesis. This multi-faceted value proposition creates a powerful feedback loop. The rising price attracts more developers and entrepreneurs who build more useful applications and infrastructure, which in turn attracts more users and increases utility, which drives further price discovery. We are in the midst of this virtuous cycle, and the break past a 111,000 is a direct reflection of the market beginning to comprehend and value this expanded potential. The narrative is no longer just about hedging against inflation. It's about participating in the foundational layer of a new, global, open, and permissionless financial system. It's about being early to the Internet of Value. The institutions buying the ETFs are buying the bedrock. The entrepreneurs building on Lightning are building the highways. And the users transacting with it are the traffic that gives the entire system its purpose in life. This convergence of a sound monetary policy with a burgeoning technological ecosystem is creating a gravitational pull on capital that is simply too powerful to ignore. But to truly complete this picture, to understand the full scope of what this 111,000 price point signifies for your future and the future of everyone on this planet, we must now turn our gaze to the most macro canvas of all, the global geopolitical chessboard, where Bitcoin is no longer just a financial asset, but a strategic tool for national sovereignty and individual freedom in an increasingly fractured and unstable world. And before we dive into that critical final piece of the puzzle, make sure you have subscribed and hit that notification bell, because what we're about to explore is the ultimate reason why this journey is far from over, and why understanding it is no longer optional for anyone who cares about their financial future. And so we arrive at the ultimate, the most profound, and the most deeply personal layer of this entire story, the geopolitical and human layer. Because the journey to 111,000 is not just a story of charts and economics. It is a story of power, sovereignty, and a fundamental renegotiation of the relationship between the individual and the state. We are living through a period of great fragmentation. The post-World War II liberal world order, built upon the hegemony of the US dollar as the global reserve currency, is showing deep structural cracks. We see it in the trade wars. The sanctions used as a primary tool of foreign policy, the weaponization of the global financial plumbing through systems like SEISMIC, and the alarming descent towards currency controls and capital flight restrictions in various nations. In this new era of digital brinkmanship, a neutral, borderless, censorship-resistant, and a political asset is no longer just an interesting investment opportunity. It is becoming a strategic imperative for nations and a lifeline for their citizens. Let's talk about the nation-state perspective first. For countries that find themselves on the wrong side of American foreign policy, or for those who simply wish to assert their financial independence and insulate themselves from the whims of the Federal Reserve, Bitcoin presents a tantalizing alternative for their central bank reserves. Why hold US Treasury bills, an instrument of a foreign nation's debt that can be frozen or seized with the stroke of a pen, when you can hold a monetary good that exists outside of any one country's jurisdiction, that cannot be confiscated through digital means, and whose monetary policy is transparent and predictable? El Salvador was the pioneer, but it will not be the last. We are already seeing serious discussions in other nations about allocating a portion of their sovereign wealth to Bitcoin. This is the digital gold narrative playing out on a geopolitical scale, but with a crucial advantage: gold is physical. It's heavy, it's costly to secure and transport, and its ownership and transfer are easily tracked and potentially blocked. Bitcoin is information. It can be moved across the planet through cyberspace in minutes with a private key memorized in a person's mind. This makes it the ultimate asset for sovereign preservation in a turbulent world. But this story becomes even more critical when we zoom in from the level of nations to the level of individual human beings. Across the globe, from Argentina to Turkey, from Nigeria to Lebanon, Venezuela to Zimbabwe, we have witnessed real-time case studies of hyperinflation and authoritarian governments destroying the life savings of their populations by manipulating and devaluing the national currency. For the people in these countries, Bitcoin is not a speculative asset to get rich. It is a tool for basic financial survival. It is the only accessible vault that their government cannot inflate away. It is the only way to save for tomorrow with any certainty that what they save will still be there and have value when they need it. It is the only way to engage in international trade or receive remittances from family abroad when the local banking system has collapsed or is controlled by a corrupt regime. When you see a citizen of a collapsing economy buying Bitcoin, they are not making a bet on a 0.63% daily gain. They are performing a radical act of self-preservation. They are opting out of a system that has failed them. They are claiming their financial sovereignty. This is the human rights narrative of Bitcoin, and it is arguably its most important. It gives people a choice. And this brings us to the most powerful unifying theme that ties the institutional demand, the technological evolution, and the geopolitical shift together: the unstoppable network effect. Every nation that considers adding Bitcoin to its reserves, every corporation that converts its treasury, every institution that buys a Bitcoin ETF share, every developer who builds a new application on the Lightning Network, and every individual in a failing state who uses it to protect their family's future. They are all, knowingly or not, contributing to the same outcome. They are reinforcing the network's security. They are enhancing its liquidity, and they are cementing its value proposition. They are adding a brick to the foundation of a new global open monetary network. This is a positive feedback loop of unprecedented scale and power. The 111,000 price is not the cause of this. It is the effect. It is the scoreboard reflecting the sheer cumulative weight of millions of individual and collective decisions to place a bet on a decentralized future. It is a collective realization that in a world of increasing uncertainty, centralized control, and monetary experimentation, there is one system that offers certainty, neutrality, and a predictable path. The old world of finance is built on trust. The new world, the world of Bitcoin, is built on truth, the verifiable mathematical truth of its code and its immutable ledger. The breakthrough this psychological barrier is a declaration that the new world is winning. It is a signal flare illuminating the path forward. The journey is not over. In many ways, it is just beginning. The volatility will remain, the skeptics will grow louder, and the regulatory battles will intensify. But the trajectory is now undeniable. The question is no longer if Bitcoin will become a cornerstone of the global financial system, but how quickly and to what degree. And so, as we stand here at this incredible milestone, looking back at the journey from a white paper to a trillion plus asset class, the most important question you must ask yourself is not, have I missed the boat? The boat is still being built, and it's getting stronger and more seaworthy with every passing day. The real question is, where do I want to be positioned in the next 5, 10, 20 years? Do you want to be on the old ship, leaking and slowly sinking under the weight of its own debt and dogma? Or do you want to be on this new ark built on code and consensus, sailing towards a horizon of financial sovereignty and individual empowerment? The choice is yours, and the time to choose is now. This isn't just about money, it's about the future you want to live in. And if you are ready to take that next step, to move from being a spectator to an active participant in this new financial revolution, then I want you to do one more thing for yourself. Share this video with one person you care about. Share it with a friend, a family member, a colleague who needs to hear this message. Start the conversation, help them see the matrix. Because this isn't just my mission, it's ours. Together we can build a more open, fair, and transparent financial future for everyone. Now, go out there and claim your sovereignty.